Let's get started right away. We have another set of pitches coming down. Of course, we're going to start with Canary. You have the slides ready over there? All right, we're going to get started right now with when we have, emergency for benefits emergencies. Let's talk about those things. What do we need, Rachel? Can you help me understand it better? Yes. There you go. And you need a clicker?
I do. I need a clicker.
And it goes down to go forward. It's kind of
okay.
Not what you think.
Awesome. Terrific. Hi, everybody. I'm Rachel Schneider from Canary, where we believe the right money at the right time matters. So what we do is we deliver tax-advantaged emergency payments to workers in crisis. So right away I have to say it's not savings, it's not a loan. This is a non-recourse payment that's being made really as a charitable activity. And so what employers are doing here is they're setting up a charitable fund, and then when employees experience a crisis, we manage everything about helping that employee then apply for help. So every year, and this is data that's from before the pandemic. So on an annual basis, 60% of people experience some kind of major financial shock. They live in the path of a hurricane, they have a major house repair, a major medical event, and many people can weather those shocks perfectly easily, but many can't. And increasingly, there's a good business reason for employers to step in when they can't. And the first thing we hear from employers about why they do this work with us is, the first thing they say is we want to do the right thing. This is right for us culturally. The second thing they say, if anybody who's managed people before says, hey, I had this person on my team and they were doing great. And then X happened. And then they started showing up late and being really ineffective. And invariably the manager says, if I could have helped them with that thing, if I could have helped repair their car, if I could have helped them stay stably housed, that would have been better for them and better for me. The third thing we hear from employers is we're doing this anyway, but in a crappy way. And it's expensive and inefficient. So somebody comes to us ad hoc and asks for help, and then I, as the manager, have to decide what are we going to do. And that is a terrible position to be in as a leader. You don't want to say no. You can't say yes. If you say yes occasionally, then you'll say yes unfairly to some people and not to others, right? It's a really disastrous position for them to be in. So there's a lot of value to formalizing this natural informal behavior, which does happen in all communities everywhere. We all, in fact, help each other. I went the wrong way. So we make fund management efficient and dignified. Our solution, this is a snapshot of what it looks like when you come to apply. People are really ashamed to ask for help. They feel terrible about it. And so it's important to treat them really carefully when they come and increase their dignity and reassure them that this will be anonymous. They will not have to tell their manager. They will not have to tell their HR leader. On the employer side, what we care about is providing data back. Right? This is the health of your fund. This is what money is going for. These are the kinds of things your people experiencing. And HR leaders find this incredibly useful because it is helpful to them in understanding where are our benefits falling short? What kinds of stuff are our people experiencing? It's really a window into the financial lives of their employees. So this is a massive market. If you think about all employers globally paying sort of an average of what we're charging the employers we work with, and it's a $17 billion market. This product category exists, and large employers are often doing this on their own. So our mission is to bring this idea to all employers. And we're particularly well positioned to do that. So my background is as a researcher and a national expert in financial health and well-being. So I wrote a book in 2018, or it came out in 2017, called The Financial Diaries. I partnered with a professor at NYU. And after that book came out, I spent time at the Aspen Institute and consulting with some of the largest employers in the country to understand how they run funds like this on their own. So we're particularly well positioned to take those learnings and bring them to creating a ubiquitous solution for all employers. So we're making pretty good progress. We've been at it not that long, and we're now covering about 30,000 employees. We are days away, apparently, like we've actually, knock on wood, finished our last red lines on a contract with our first true enterprise employer, which is a global employer, and we'll bring this number up meaningfully. The business model here is also very straightforward. So essentially, we're charging a service fee. It's an annual service fee based on the size and complexity of the employer and their program. And then we are, like any other SaaS product, able to really automate much of what we're doing so that we'll be able to drive higher margins over time. There's also incredible loyalty and stickiness to this product. One of our CEOs basically said, I have to keep offering this forever. Like, I offered it now, and if I take it away, then I'm an asshole. Right? Like, that was his, like, and that is the case. Like, this is a very hard thing to walk away from, and we partner very deeply with our clients. So we're in the midst of raising a seed round to build on our current momentum. We're excited about where we're headed from a revenue perspective and looking for partners. Thank you.
Sorry. Yep, you're good. Thank you so much.
Of course.
All right, guys. I should turn it on. How about that? There we go. Moving forward with our next pitch is CoverGo, the no-code solution.
Ted, yep.
Ted, thank you so much.
So do we hit down?
Down to go forward.
Down to go forward. All right, sounds like my life. All right, so hey, I'm Ted Stearns with CoverGo. I'm trying not to say that I'm CEO of CoverGo. I'm not CEO of CoverGo. It's kind of hard for me because I've been CEO of InsurTech companies for the last 15 years. I'm head of sales for CoverGo. Thomas, wow, geez, that's a big picture. Sorry about that, guys. My mom always said I've got a face for radio, not for presentations. But you think about CoverGo. CoverGo is it's a policy admin system, no code, modular policy admin system. Now there's a lot of policy admin systems out there, right? We've got some of the good ones. Pete, you still here from Socotra? No? Okay, so Socotra, one of those. Great company. Now, I've got to admit, guys, I've got a problem, and I'm going to confide in you because I think you guys are insure geeks as well. You guys insure geeks? Anybody out there? Insure geeks, thank you. Yes. I've started 3 different InsurTech companies, sold one to AIG, sold another to Insurance Carrier of the West, and then rolled one into Mutual of Omaha. And so you may be telling yourself or asking yourself that, Ted, why are you a glutton for punishment? Why start 3 InsurTech companies? Well, for all the entrepreneurs out here, what do we like to do? We like to solve problems, right? And this industry is a $4.5 trillion business, and it's got a lot of problems in it. A lot of problems. So for us entrepreneurs, we love to fix it. Think about this, $4.5 trillion business. If we were a country in terms of GDP, we would be the 3rd largest country out there. We would be bigger than Canada, the UK, Germany, France, Brazil, Russia. It's a big market. And the crazy thing is that $4.5 trillion is using an operating system for the most part that was built probably 10, 15, 20, 25, 30 years ago. That's insane. So you've got up and coming InsurTech companies that are fixing that problem. So when you think of CoverGo, think of us as a policy admin system. So we are the operating system for the insurance industry. It's modular. I'll get into that. It's end-to-end. I'll get into that as well. But before we do that, we're going to talk about my friend Joe. Now, anybody that's been in the insurance sector for more than 3 or 4 or 5 years, they know Joe. He's a CIO, and he is up to his eyeballs in tech debt. He's probably a year behind schedule, and he has absolutely no engineering capacity whatsoever. But what we are going to do is that we're going to help Joe out. We're going to find a solution for him. So the way that we're going to do that is that Michelle is here. Michelle so beautifully and eloquently says that there's 3 tiers of policy admin companies. You've got your lower tier companies that we may not hear about, Clear Door, Innovate. These are no-code, low-code platforms. They're not end-to-end, but they can get Joe up and running in about 4 months at about $300,000. Not too shabby, right? The only thing is that a lot of these companies, they weren't built for the insurance sector. So to customize it, it's going to take a lot of engineering clout. That's engineering time that he doesn't have. So he's going to run for the hills. That's not a solution. You got your mid-tier companies that we've heard of, like Socotra, Sapiens, Inslee. They're SaaS, they're cloud-based. They've got beautiful public-facing APIs. That's pretty good. But the only drawback is that they're not end-to-end. They're not no-code. And so, again, he's going to have to use a lot of engineers to help him out. So the third, we've got some faith and confidence in the third. The third tier, or the top tier, are the companies that we've all heard about. These are the companies that have been around for 30 or 40 years, the Guidewires, the Duck Creeks. These are true end-to-end platforms. I was going to say SaaS. They're not SaaS. The drawback is, has any insurance carrier implemented one of these companies? On average, it takes a year, 2 years, 3 years to implement, and we're talking about millions of dollars. So if Joe wants quick wins, which he does, that's not a good option. So at the end of the day, Joe's got his hands up in the air and he's saying to himself that there has got to be a better way. And indeed, there is. CoverGo. So CoverGo is a end-to-end policy admin system. It's modular, which modular means that Joe can pick out the different modules that he wants and use those. It's no code. No code means that he doesn't have to rely on the engineering department. So we're going to go through 3 of the tenets of it. The first one is a policy builder. We know that right now for Joe, it's going to take him about 12 months to build a policy. Okay, that's on average how long it takes for an insurance carrier to build a policy. With our policy builder, you, me, anybody in this room can actually build an insurance product. No code whatsoever. So the average time that it takes for an insurance carrier to build a product without us is 12 months. With us is about 12 days. That's how long it takes. Number one. Number two is that it's modular. So yes, it's a full policy admin system. But if he just wants the rate, quote, and bind for a quick win, for a quick implementation, he can go ahead and do that. And then number 3, it's no code. So we don't need developers. Okay, we can implement super fast. So in the end, what it does do for him is that it buys back opportunity cost. At a low cost, it's very lightweight, and it gives him the quick wins that he wants. So for the investors that are in the room, we've been around for 5-6 years. We've got more than 35 clients all throughout the world, Southeast Asia, Asia, Europe, Middle East, and now North America. So we did our Series A round. We oversubscribed our C round, oversubscribed our Series A round. Our customer count is up more than 300%. Our deal size goes up about 50% from where we were in March. And then our ARR is up times 30. So if you're interested in investing in CoverGo, we'll likely be opening up a Series A round or Series B round in the first quarter of next year. But if you are a carrier and an MGA, and if anything that I said about Joe resonated with you, if you're looking to increase your speed to market, if you want to cut your dependency on IT and you want to buy back the opportunity cost, would love to talk to you. So again, I'm Ted Stearns. I'm not CEO. I'm head of sales. Thanks for your time.
Never guessed that one. Love it. Thank you so much. Yeah, as we move forward, just drop it right here for me. Thank you so much.
Thank you, sir.
You guys ever heard the term smoker's amnesia? Ever heard of that one? You know that one? Oh. Anyway, this is about behavior science. Oh, sorry, let me squeeze by you. Grab that. And, you have people kind of lie in applications, right? So this is one way that I'd love to learn more about what you guys do in terms of Formotive and how you address those folks who fidge.
Awesome. Well, good afternoon, everybody. I'm Kyle Washburn here representing my company, Formotive. So we are a behavioral data science platform built specifically for the insurance industry that makes predicting end user intent simple. Today, we are trusted by 3 of the top 10 P&C carriers, 4 of the top 10 life carriers, and we're collecting and analyzing behavioral data on over 25 million insurance applications each month. Now, the reason our business exists is 15 years ago, insurance was primarily a face-to-face business. I'm an agent, I'm sitting across the desk from a prospective customer, and we're moving through that quote or application. I notice the customer looks frustrated, they look confused, so I'm going to do something to help them out. Well, in today's world of this new digital insurance, you can't do that. People are behind the screen, behind their mouse and keyboard, and they tend to lie, they tend not to tell the truth. So here's an example of what an application looks like for many carriers today. All you get is that final answer data submitted by the customer. At Formotive, we like to change that by providing real-time behavioral insights as the user or agent moves through that quote or application. And what we found is that these behavioral insights that we're picking up are very telling in what that applicant is trying to accomplish online, whether that's a genuine user trying to get a policy, somebody window shopping for a lower price, or somebody who is high risk or potentially a fraudster. So we are creating predictive models and analyzing this behavior in real time to help carriers make smarter underwriting decisions and make better channel preference options for their customers. A little bit about some of the solutions. We've got 4. I'm going to focus on 2 specifically for the insurance space. Our first is the bind lift solution. We hear from every single one of our customers that they're looking for ways to convert more users without opening the doors for risk and fraud. And so what we've done is built a solution that looks at behaviors we've learned over the years that are consistent with a high intent buyer that is looking to convert on a policy, and vice versa, behaviors that are consistent with those window shoppers. And what we do is enable carriers to create dynamic experiences in real time to drive conversions while reducing time wasted on these window shoppers. Quick example, I'm a high intent buyer. ForMotive has a high intent buy score, but for some reason I'm frustrated on that payment page. We don't want to lose that customer, so what does ForMotive do? We pop up a chatbot or a dedicated phone number for that user to be on the phone with an agent in less than 30 seconds. Our second solution is risk and fraud. As carriers are moving digitally, we hear every single one of them is dealing with higher risk applicants and more cases of fraud. So what we do is we built a solution to fix just that. We have identified behaviors on high impact underwriting fields that are significant or typically consistent of higher risk or potentially fraudulent applicants. And again, enable carriers to change that user experience to drive a desired outcome in real time. For example, I'm going through a life application and I behave in a certain way on my alcohol and smoking question. I say I'm a smoker and then I say, you know what, ladder's not going to fluid test me, I'm going to change my answer to no. We capture all this information in real time, provide it back to the carrier, and enable that carrier to say, based on those behaviors, let's actually pull that person out of the accelerated flow, send them to a telemed interview or get a lab test for them. Now, I don't know if this is going to play here. I've got a quick demo. It doesn't look like it is going to. So, oh, there we go. Let's see. Nope. All right. So, quick example of the bind lift solution. This is with a top 3 P&C carrier. And if you look at this blue line here, this is their average bind rate. And they're using just how far into an application, as you can see at the bottom, that a user gets. The further along in the application, the higher intent that user is to bind a policy. Well, using behavioral data, we're actually able to stratify their users into different groups or cohorts based on their likelihood to bind at each page, each stage of that application. So you'll see at the bottom here, on the second page of the application, that vehicle screen, we can actually pick out the top 10% of your applicants who are have a 25% bind rate against the 5% base bind rate. And even more importantly, with that yellow line, we can pick out your lowest 10% of users with up to 7 times less likely chance to bind a policy. Carriers are using this information to dictate when they call third-party reports, sometimes saving money by not calling reports for those low-intent users and calling reports earlier in the funnel for those high-intent users to present them with the proper quote or price for the first time. So my ask here is any carrier, MGA, lead aggregator that has a digital quote or application process and would like to try this out, give me a call. And everybody or anybody in the claims space who would like to pilot behavioral data, we have proven this out with top carriers for both bind and risk and fraud use cases. We have not done so with claims, but have very strong belief that this will work in the claims space as well. Thank you.
Awesome. Great job. Thank you very much. I appreciate it. Drop it off right there. Thank you. As we keep moving forward, let's talk about low code, no code. Somebody just mentioned that we had some great performance here. So here's another one.
Yeah.
Come on up. Head of marketing, please.
Right. Thank you so much. So are you ready for another discussion on no code? Hopefully I can speed through this because you've already heard a lot of the things about the advantages of it. So I'm the head of marketing, 20 years in insurance technology, worked with a number of core system players as well as, technology services companies. Oh, I got to go the other way. All right. Yeah. So Innovia is an enterprise no-code development platform. So what we really do is organizations use us as a platform and then decide what they want to develop, right? They can develop a policy admin system. They can develop a front-end system. They can develop any number of applications. We have clients who have used us in multiple ways, and I'll get to that, right? But what we're really trying to do is, for complex regulated industries like insurance, sort of help them reimagine and accelerate the application development process. So I'm not going to go on this a lot. You've heard multiple of this across today: legacy complexity, skill shortage, disconnected ecosystem, right? All of those are the problems that no-code development platforms help you solve. And so I'll move to how we're actually solving it, right? So the platform is no-code, so you can pretty much have applications developed without needing IT skills or your IT teams to be involved. And this is a big pain point because, there's just not enough IT teams, or the pipeline is so long before you get to your project that you just have to wait a year to get your application developed. So when you use a no-code platform, you get to do it yourself. And it's a pure no-code. You don't need IT teams to help you design and deploy it, including even when you're trying to do the API layers and stuff. So there's a lot of different no-code platforms, but many of them tend to need some level of IT. This one's a pure no-code. Everything can be done by business teams. And so what we'll get into is, we have 30 plus customers. We're essentially a reborn startup. So we were a startup, got acquired, so had an exit. And then we decided we didn't like that world of being inside an organization a whole lot. So we've come back out to, again, be a startup. So in 2018, we came back into the startup world. We have 30 odd customers, some of the biggest names. What I'll try to do is make it sort of real. So AIG is using us in Asia Pac as a way to embed themselves into an ecosystem where if you fly or if you're taking a taxi ride, when you hail that cab ride, you're able to insure that one particular trip, right? So it's a very large volume, massive millions of hits kind of a business, and they're getting to embed themselves into different Uber-like apps and things like that, right? Cover, which is a Brazilian insurer, they were trying to sort of start a greenfield, customer-centric insurance product. And so they built everything from the front end to policy admin, claims, billing. The entire system is built on Inovio Sky platform. Chubb, Blink by Chubb, you guys might have heard of them. So when they decided to go ahead and create this sort of a new age insurance experience, they picked Inovio Sky to be the platform that they actually built it on, right? And similar, we see a lot of underwriting workbenches. We see a lot of greenfield end-to-end insurance in a box. We also see a lot of front-end portals, e-app, new business product kind of stuff. So that's the sort of areas we're seeing insurers pick the Inovio Sky platform for. You heard the numbers, they're massive, right? Gartner predicts 75% of application development, custom application development, will have moved to sort of low-code, no-code development platforms. That market is like a crazy trillions of dollars. We look at it very conservatively. We look at it simply by what are the use cases the Inovio Sky platform is solving today, and how much is that market? And that market is still a massive $70 billion market, right? And it's predicted that it'll grow 2x in the next 5 years. And as we get into new use cases, as we get into new verticals, because right now we do P&C and we're getting into LNA, and we expect to get into health insurance as well in 2023, 2024. So that market just keeps growing for us. And so ultimately, why do insurers choose the Inovio Sky platform over other no-code, low-code platforms? It's because the platform's actually been around for 15 years. Although the company is kind of reborn 2-3 years ago, but the platform's 15 years old. We've always built for the insurance market, so we understand the complexity, and it's very mature that way. Management team, I'm the head of marketing, 20 years of insurance marketing experience. Our CEO has been in the insurance space for 30 odd years. The entire team is very experienced, so we understand the space, we understand the problems, and we're The engineering team is based out of Switzerland. Again, lots of experience of solving insurance problems. We've been solving them, and our plan and the way we do it is we kind of land with one use case, and then we start to expand in every organization. We have virtually zero churn, and so that's really sort of us. If you're looking to, what are we looking for? We are right now going through our Series B, and for the most part, we're looking to find new partners, and we're looking for ways to talk to more insurers. Yeah, thank you.
Great. Thank you so much. I actually met Vinod when I was working at MetLife. So I know he has 30 years. Ugh. Oliver. Hey, insurance fraud's a thing. If people are caught out there in the golf courses and they put a workers' comp in there, that's horrible. But you know what? This is something like that. I'll let Benji say your name. I said it wrong again.
Yevgeny.
Yevgeny. There it is. I'll get it right. Can't even say Roy right, so thanks. After you.
Thank you. So I lead Pilotbird. My name is Yevgeny Alexandrov. I'm founder and CEO. Today, I would like to talk to you about eliminating global insurance fraud. As long as I get my clicker. 1 second. All right. Perfect. So we live in a world with higher insurance premiums, in large part because there's insurance fraud. It costs your family on average $700 every single year. We all pay fraud tax in insurance. That's because 1 in 10 claims in the US are ineligible. Right now, there's about 5 million workers' comp claims filed, and another 5 in disability and long-term care. 1 in 10 of them are ineligible, and that's where we focus at Pilotbird. So this is Tim. He works on FedEx floor, and he has a workers' comp claim open right now. It's amazing because he's playing golf at Polk Hill Country Club, enjoying his life and getting paid for it. We catch Tim by using latest DevOps and AI on open data. So we gather information across multiple data sources, publicly available, and stitch it together, clean it up. We have data on 8 million lives in the US across 350,000 businesses. We have trained the engine, and we've been able to validate it with carriers. Not only do we have the engine working, but we also have it accessible through an API and the web portal. And the web portal is very important because it helps us shrink our go-to-market and sales cycle, helping carriers show quick wins to win bigger contracts. We have done 6 paid pilots, commercial contract, and our sales pipeline is very rapid compared to some of the other lines of businesses or value chains in insurance. We're the right team to do this. I lead business, David drives technology. We have worked together for 5 years. We both are repeat founders. I remember my time at McKinsey where I evaluated financial impact of fraud for large carriers. I had to double check my numbers multiple times because the values were so huge. It really drives the needle. So today I talk to you about eliminating global insurance fraud. We are well under our way to do so. We have raised initial commitment on our seed funding. There's still $1.5 million remaining in the round. We also welcome introductions to insurance carriers and TPAs who are aware about claims in their businesses and the fraud in the system. Thank you very much. Come talk to me later.
Thank you very much. The clicker too. It's kind of interesting how small this world is. That you run into other insurance folks you worked with in the past. As our next speaker is as well. He's going to talk about Plum Life, and it's the Shopify of life insurance. He liked to say, and he said, "Say we're the best." So I said it in quotations. Over to you, Manish.
Thanks a lot, Roy.
Plum Life.
Hi, everybody. I'm Manish Bhatt. I'm a co-founder and CEO of Plum Life, and I'd like to talk to you about life insurance because we haven't talked about that enough today. So Here's the problem as we see it. It's very simple. COVID-19 has forced agents from the kitchen table to their laptops and their phones. People are no longer selling face-to-face, but they're having to do it digitally. Kyle at Ford Motive talked about this. Unfortunately, as a result, application completion rates are dropping, right? You can't, no more Ned Ryerson from Groundhog's Day kind of pressuring people into buying insurance. You're hoping people will open their emails. You're hoping people answer their phones. And of course, no one does. And agents are not digital marketers, nor should they have to be. Agents don't necessarily know how to nurture these things through digital assets. Fortunately, there's a solution. And the best way to think about Plum Life, as Roy was saying, is we do for life insurance agents what Shopify does for retailers. So I don't know if you guys remember a long time ago, everybody put up a website to sell stuff, and it was a mess. And it looked something like this, where things all over the place. It's very difficult to get things into your shopping cart. It's difficult to pay. And along came Shopify, and now you have something beautiful like this. And this made a huge difference. Unfortunately, life insurance websites still kind of look pretty bad. So this is an example of something out there today. And what Plum Life does is it takes that same website for that person and makes it very simple and easy. So here you can see just a very simple website where you can get a quote. An agent could put their picture up. They could put the Calendly link. It's for the modern world. It's a huge opportunity. The market size, $12 billion of premium is sold every year by agents. There's over 400,000 life insurance licensed advisors out there, and 52% of them are independent advisors, and that's our target. In terms of what the actual tool is, the portal is, this is an example of the home screen for the agents that sign up on our platform. As you can see, it's a one-stop shop for everything they need to do. They can manage leads, applications, clients, commissions, even recruit agents under them. They can easily start a quote for various products for their clients, send that quote out to their client, or even do an application for their client, or send it to their client for the client to do. We have assets that they can use on social media. They get their own personal Plum page, which I showed you. Makes it very simple and easy. We even have tools to upload lists. If you're trying to cross-sell your property and casualty or health clients' life insurance, upload them, pick one of our letters. Very simple. Who we are? We're all life insurance people. We're life insurance geeks. We've all been in the industry for a while. On average, we spent about 20 years serving our pennants with large carriers like MetLife and John Hancock. We've also all done for about the last 7 years entrepreneurial work, whether it was starting Plum Life or before that doing consulting. And we just live life insurance, and we're trying to fix it. And so we're really passionate about that. In terms of our business model, pretty simple. So our agents, they go out, they sell a policy, $375,000 face amount. It generates a $900 premium to the insurance company. The insurance company pays us $1,200 of revenue. Pretty straightforward. It's been going really well. So we started last August in pilot. We've grown to over 3,200 agents. It's actually a little bit old. Our NPS score is 62 on average. It's the last few months, it's been in the 80s. Agents love our platform. They tell us it's the best platform out there. The only thing they tell us is, can you get some more products, which we're going to talk about in a second. In terms of revenue, things have gone really well here as well. These are monthly gross revenues. So we started in pilot last August. We did a national launch in September. We expanded our distribution pretty significantly earlier this year, and then we started adding new products just a few months ago. And so we're looking to keep this trend going. We've raised $7.8 million of capital so far. Our last evaluation was 23.5. And we're looking to raise another 9.8 in the first half of next year. And that money will go specifically to add new products, which our advisors are asking for, expand our sales organization, which is key to activating people, and to acquire another 5,000 incremental agents. So in summary, we feel like we've validated the market fit, we've proven that we can grow the business, and now we're seeking funding to scale the business. And that's it. I'm around if you guys want to talk about it. I'd love to talk to anybody who's interested. And I will say a plug for Ford Motive. I really like what you guys are doing. We should talk. Thanks.
Awesome. So much. Hey, this next pitch is something I needed today. I had a break in my water line pipe. I had brown water, so I could use the 90-day fund. So with that said, take it away. Help me out. How can I use this?
We'll make sure we get you signed up right away.
Right away.
Hi, everyone. My name is Sid Pila. I'm the founder and CEO of Sunny Day Fund. Thank you for joining us today. We're on a mission to enable all 152 million hardworking Americans with financial well-being. And you all know that that starts with emergency savings. The reason that if you're a benefit broker or an investor are paying attention to this is because there's about to be a forcing function, legislatively speaking. The Secure Act 2.0 is bound to include workplace emergency savings when it passes. And when it does, you need to have a solution for it, and we'll be that solution. But before we get that far, let's talk about Sarah. Sarah is a certified nursing assistant at a hospital system. She's making currently $18, $19, $20 an hour, and she has less than $1,000 in her emergency savings. And of course, Rachel, thank you for already doing the work of explaining why that is already a problem. But here's the other stuff that you should also know. When Sarah is taking money out, it's not just out of her savings. It's also coming out of her retirement savings. This is a big problem as well. We're talking about 20 to 30% of 401k plan participants taking money out of their retirement savings. And guess what? You already know this, but again, it's Black and Hispanic and women Americans that are taking disproportionately more money out of their retirement savings, stealing from their future wealth in order to take care of their present today. And that's costing employers money too. That's costing on average $18,000 a year. Some of the reasons Rachel has already covered, but again, specifically the 401k loans and hardship withdrawals causing a bigger issue and also creating a financially driven racial gap. So workers like Sarah specifically want help saving for emergencies. We know that 9 in 10 working adults want this help. And as I said earlier, Secure Act 2.0 is about to enable automatic enrollment into workplace emergency savings. So this is, again, the reason you should be paying attention to this. It's more attractive than earned wage access solutions, about 2 to 3 times more attractive than earned wage access solutions, 7 times more attractive than your basic financial wellness solution, which is going to tell you to open an emergency savings account anyways, which guess what we're doing. And it lowers leakage. $1,000 in your Sunny Day Fund cuts 401k loans and hardship withdrawals in half. It's also driven retention up by 25%, as we have seen in our early clients. And this is the part that I'm most proud of. At the end of the day, we're talking about actual impact and expanding access to financial products to entire groups that have not had it before. So what does Sunny Day Fund actually do? Well, more specifically, we're an out-of-plan, outside of ERISA, none of that crazy compliance in this case, out-of-plan workplace emergency savings program. We integrate with payroll via API or SFTP, which are a way that the employer wants us to work with them. And we make sure to set up post-tax deductions, money coming out of the paycheck directly, where that money is going into a brand new FDIC-insured demand deposit account. That is not a custodial account like a lot of our competitors. I like to say that we're giving Britney Spears her own account rather than trying to be a father in the mix. And we want to make sure that at the end of the day, those employees trust where that money is sitting. That money, there's no minimums, there's no penalties. They can get it within 12 hours to 24 hours. And we're working on streamlining that even further with a card-based model coming out later with the help of some funding that we'll receive from you. And this is also goal-driven, not just an emergency fund. One of our unique insights is that when you're enabling people to save for both an emergency as well as their near-term personal goals, the total amount of savings that they have end up being more. I want people to have more money, don't you? That's exactly how we approach that. As a result of the way that we structured this, we have been able to drive up the amount of savings that people have on hand. Specifically, people's interest rates are subsidized by their employer. We're talking about 10, 20, 30, 40% per year, capped at no more than $400, $500. Again, something that's much more customizable. That's another piece of our unique insight. At the end of the day, when interest rates are so low in the private markets and they still require a $250 minimum, there is no incentive for people to save. There's only incentives for you to spend. And as a result of that, what we've been able to do is flip that model and ask the employees to step up with themselves. You're able to see the really high employee voluntary participation on the top right-hand over there, 54%. And we've been able to observe $1,000 in average annualized savings for individuals that are earning $18 to $23 per hour. Well, guess what? That's way more than the $400 that we keep hearing about. And at the end of the day, we've been able to drive impact, as you can see here. From an investment perspective, we're raising $3 million in order to expedite some of the demand-driven growth we are seeing ahead of a Series A later next year. Specifically, this is helping us build out some of our enterprise implementation capability, as well as the card-based withdrawal method that I talked about previously. I'm in this because I'm mission delusional about workplace financial well-being. I've gone through the financial hardship. I know what it's like to have those situations, and I'm surrounded by team members that feel as passionately as I do. So please join us, partner with us. If you're a benefit broker or investor, please come and find me. Thank you and have a sunny day.
Thanks, Sid. Perfect. Sorry, I'm on my fingers. I got you. With that, I want to introduce Gus, Trustee Care. Let's talk about the healthcare marketplace, if you don't mind, Gus. Help me out.
Definitely. I'm excited to share with you how Trustee Care is transforming how health insurance is distributed and sold for 150 million Americans that get Medicare, Medicaid, or Obamacare. Healthcare is a massive market, but what is often overlooked is the role that individual healthcare plays. It is both where a lot of money is, and it is how millions of Americans access care. My name is Gustavius Smith. I'm a founding employee at Trustee Care. I was asked to stand in for our CEO today, so I'm also pitch hitting. I can talk to you about our value prop and how we are reducing the administrative burden for our clients, but let me introduce to you our executive team. Joe, our CEO, has built 4 successful technology companies, integrated products with the largest health systems, long-term care companies, and state governments. Jerry, our CTO, is at the forefront of AI and leads our relationship with Karen Alliance, where he has been building product with Humana. Tony is new to our team and has been leading growth teams in healthcare for the last 30 years. Clayton, Director of Customer Success, has spent the last 20 years leading customer support for some of the largest health companies in the country. And finally, Bonnie, our COO, has worked in operations in healthcare for over a decade, including growing her last company through a successful acquisition. We are the team to address one of the most important things happening in health insurance. Traditionally, health insurance did 2 things well: build products and administer them. In the last 5 years, the market has changed dramatically. Medicare Advantage has changed the landscape, making consumers shop around more and putting pressure on insurers to keep up. How competitive is it? In the last 5 years, the major health plans have been crushing regional carriers. They went from owning 50% of the market to over 70% of the market. But consumers have been dissatisfied. Over 50% of members switch plans after being sold the plan within 90 days. These trends are the wake-up call the industry needed to move from 1990 to 2022. We've built precisely what carriers are looking for, optimizing technology from sales to retention. So, grow your plan with our sales platform, Trustee Select Pro. It's sold to both brokers and carriers. It powers everything you need to make the sale, from D2C sales portal, agency portal, call center support, and a whole lot more. Trustee Back Office Pro gives carriers and brokerages a clear picture of their income and where it comes from, while providing actionable market insights from sales data. And finally, the sale is not complete if you lose the customer. The platform increases loyalty by giving consumers clear information on how their plan can work for them year-round. Just one layer deeper on our products, we start the sale with Trustee Select Pro. It provides health plan and ancillary coding and enrollment software, currently used by independent brokers and captive agents. In the sales process, we collect health data, such as medications, providers, and social determinants of health, to help with plan utilization and predict future health risks that could lead to churn. And finally, we use all that data to help carriers and brokerages automate commissions, reconciliation, and understand how to grow their business. We are growing rapidly in both the broker and carrier market. This year, we experienced 120% year-over-year growth. And here's how we're doing it. We're using a proven business model, enterprise and mid-market SaaS. We sell our products to the sales department of a carrier or to their external brokerages. There are very few companies in this industry because it is regulated, heavily regulated, that is, and until recently, there wasn't an appetite for change. We are already partnered with one of our biggest competitors. We have built this company to scale, but with solid metrics. We anticipate hitting profitability no later than 2024. Health insurance is a massive market. We are the only venture-backed company. Health insurance is a massive market. We are the only venture-backed company improving how sales are made in one of the biggest industries in the country. Our ask is, if you're interested, get in touch with us fast. We're raising our Series A to fuel growth. It is a priced round, and we're taking in $10 million in new money. Some notable investors include Manchester Story Ventures, Cultivation Capital, and Gaingels. And finally, our second act is an intro to brokers. Specifically, we're looking for intros to Blue Cross Blue Shield, Anthem, and Centene. And if you want to learn more, you can get in contact with Joe, our CEO, or you can pull me after the meeting.
Thank you very much. Appreciate it. With that, pass you that and pass me. Thank you so much. Thank you. I appreciate that. It's really good. Let's move forward to White Swan. We'll talk about permanent life. There's a lot of education I need in this, and also about the brokerage. So please, Todd, help us out.
Thank you. Hello, my name is Todd Hawk. I'm a co-founder and the COO of White Swan. White Swan, we're driving a digital transformation in the sale of permanent life insurance, and that's permanent life insurance as opposed to term life insurance. And at the heart of our solution is our digital advisor we call Alice. There's an old saying in the life insurance industry that life insurance is sold, not bought. But there's a big problem with that. It's been sold the exact same way for the last 100 years in a very door-to-door, very face-to-face type of fashion. But for today's digital-first consumer that wants to do everything online, that type of old-fashioned experience is an absolute non-starter. Agents today are basically precluded from reaching this type of consumer. Now at White Swan, we enable the agents to reach that digital-first consumer and serve and cater to them the way they expect to be treated. Now there's another more systemic problem in the permanent life insurance industry, and that's that it's only sold to a very narrow demographic, a very affluent clientele. The problem is, what about everybody else out there? There's so many people out there that could benefit from getting into a permanent life insurance policy. We see this every day, but they're just not exposed to it. They're not part of that target demographic. They don't know it exists. Now, White Swan allows anybody, no matter what demographic you want to, no matter what zip code you might live in, to be able to get quality education, real advice, and to potentially get into a permanent life insurance policy. And in the meantime, we're turning that old adage that life insurance is sold, not bought, right on its head. Now, again, our solution is, we call Alice, stands for Automated Life Insurance Concierge. And then Alice, just like any good advisor, questions to determine your needs, your risk tolerances, your sensibility. I want to stress that these questions of what we're doing here isn't just window dressing. It's not just lip service. We're educating our customers along the way to make sure we're pulling meaningful answers out of them so we can give them a meaningful recommendation. Now, as you get through the process a little farther, we're going to ask you more questions like how long do you want to pay premiums for, why that's important, how much coverage you might need, and then if they choose to, they can get even more granular. They can get into adding things like riders and even choosing underlying indices for their cash value. I'm going to ask you a couple of simple underwriting questions, and then we're going to take your information, we're going to run it through our recommendation engine. Now, we can recommend any product from any of the nation's top carriers, and we like to say we're the best type of advisor. We don't take commissions or payouts into account at all when making our decisions. Once we do that, once we come up with a recommendation, we create an illustration for our clients. But as any of you have seen a permanent life insurance illustration, to any normal person, it's just a bunch of gibberish. So just like a good agent, we're going to explain what's going on with inside that illustration. We do that through pulling out key metrics, through interactive visualizations, and then accompanying text. We also allow clients to compare across these key metrics, different policies, to see how they perform next to each other. Now, if a customer sees something they like, without leaving this experience, they can go straight through to an application. Now, we want to stress here that we're not trying to do away with human beings here. We're not trying to do away with agents. We're basically creating a new hybrid approach to selling permanent life insurance. Now, a good advisor who's busy selling to that same super affluent clientele, if they're doing great with prospecting, they might have a couple meetings a day. But with White Swan, that same agent can be anywhere in the country, 24 hours a day, 7 days a week,